Welcome to our journey through Bitcoin's fascinating market cycle, a roller coaster of highs and lows that captivates investors worldwide. Let's dive into the rhythm of Bitcoin's price changes and uncover the mysteries behind its patterns. Every 4 years, an event known as the halving shakes the Bitcoin world. This pivotal moment cuts the reward for mining new Bitcoin in half, sparking a thrilling surge in its price. Why? It's all about scarcity. With fewer new Bitcoins being created, demand outweighs supply, and up goes the price. But here's where things get even more interesting. In this latest cycle, Bitcoin's price began its ascent even before the halving event occurred. This break from tradition has everyone asking, are we on the brink of a new pattern, one that could redefine Bitcoin's future price movements? Beyond halving, there's a world of factors at play. From the flow of money across the globe to the crucial decisions made by governments on monetary policy, Bitcoin's price dances to a complex tune. How will these forces shape the path ahead? Predicting Bitcoin's market cycle is like gazing into a crystal ball surrounded by a fog of uncertainty. While past patterns offer clues, the future remains shrouded in mystery, filled with unexpected twists and turns. So, buckle up. We're on a thrilling ride through the peaks and valleys of Bitcoin's market cycle. Together, we'll explore the unknown, armed with curiosity and a sense of adventure. What will the next cycle hold? Only time will tell, but one thing is for sure, it's going to be an exciting journey. The cryptocurrency world stands on the brink of a monumental shift, potentially heralding the end of the 4-year Bitcoin cycle as we know it. At the heart of this transformation lies the introduction of spot Bitcoin exchange-traded funds, ETFs, a development that could well be the catalyst for unprecedented change. For years, the Bitcoin market operated on a predictable cycle, closely tied to its halving events every 4 years, where the reward for mining new blocks is halved, theoretically tightening supply and potentially boosting price. However, the landscape began to shift with the advent of spot Bitcoin ETFs. Their introduction has injected a new dynamism into the market, with the potential to alter Bitcoin's historical price patterns significantly. The impact of these ETFs was immediately apparent, as seen on their first trading day, where a staggering $4.6 billion worth of shares were traded, indicating a strong investor interest. This robust start, reminiscent of the early success of the first gold ETFs, suggests a significant growth trajectory for Bitcoin investments, potentially mirroring the gold market's substantial appreciation following the introduction of gold ETFs. Analysts are split on the precise impact of spot ETFs on Bitcoin's volatility and market dynamics. While some posit that these ETFs could stabilize the market by increasing liquidity and reducing the influence of crypto whales, others argue that volatility may persist due to the ETF's cash creation structures. Nevertheless, the comparison to the gold market provides a hopeful outlook, suggesting that Bitcoin could see considerable price increases, akin to gold's ascent following its ETF debut. The significance of spot ETFs extends beyond mere speculation. It represents a tangible shift in investor behavior. The introduction of such financial instruments by heavyweight firms like BlackRock indicates a growing institutional interest in cryptocurrency. Early activities surrounding BlackRock's spot Bitcoin ETF, which quickly amassed over 25,000 BTC, underscore the scale of investment flowing into Bitcoin from both retail and institutional investors. Furthermore, the daily inflows into spot Bitcoin ETFs paint a picture of overwhelming demand, with records being shattered as Bitcoin's price surged. The substantial capital influx, estimated at $70.5 billion from various markets, highlights a macroeconomic shift towards hard-value assets, with Bitcoin emerging as a preferred choice. However, the potential ramifications of this influx are far-reaching and quantifiably significant. Drawing from the current data, with the top 3 ETFs, BlackRock iShares Bitcoin, IBIT, Fidelity Wise Origin Bitcoin, FBTC, and ARK 21 Shares Bitcoin ETF, ARKB, amassing Bitcoin at an average daily increase of 8,098 BTC, the landscape of Bitcoin ownership is poised for dramatic change. Given the total Bitcoin supply cap of 21 million BTC and the current circulating supply of around 19 million BTC, these ETFs' aggressive acquisition pace signals a transformative shift. Theoretically, At this rate, the entire circulating supply of Bitcoin could be absorbed by these entities within just 6.42 years. This calculation, striking in its implications, does not even factor in the potential entrance of additional ETFs or the strategic moves by corporations like MicroStrategy seeking substantial Bitcoin exposure. Such developments could undeniably expedite the absorption process, further concentrating Bitcoin holdings and potentially altering market dynamics. This burgeoning interest in Bitcoin, propelled by the innovation of spot ETFs, underscores a pivotal moment in cryptocurrency's evolution. The data underlines a compelling narrative. We are perhaps on the cusp of dismantling the traditional Bitcoin cycle, known for its 4-year halving events and resultant volatility. The influx of new capital, diversified across a broader investor base ranging from individual retail investors to behemoth institutional players, promises a future where Bitcoin's valuation might not merely rise but do so with unprecedented stability. This shift towards an indefinite trend to the upside, as suggested by the analytical projection of ETFs' purchasing power, sets a new normal for the cryptocurrency market. It reimagines Bitcoin's cycle not as a series of peaks and troughs, but as a potential steady ascent, propelled by institutional confidence and mainstream adoption. As we stand at this crossroads, the question remains, are we ready for the new era of Bitcoin? An era not defined by cyclical retracements, but by a steady, unabated march towards unprecedented heights. The data suggests that the foundation for such a future is being laid today, with spot Bitcoin ETFs acting as the cornerstone of this new era.